So my disciplinary speech is going to be kind of uh, informative on financial advisory or stock brokerage, uh, which can be really boring. So I'm going to attempt to throw some humor in there, but this for this practice round, I'm going to give some definitions, kind of what I'm going to do in my speech, but I'm going to add some things too that I think will be beneficial um, as far as maybe throw some charts up uh, or some other things, kind of give examples of what some of the terms that I'm using, kind of give them up, what the market shows and what the stock or what a chart shows, whether it be one thing or the other. But here we go. Oh, and it's going to be kind of a dinner setting, a presentation, somewhat. I've been to a few of these things, and uh, they're really kind of laid back, and it's almost like an open forum. There's a Q&A at the end, um, which obviously I won't have that, but anyway, I'll open it up now. So, hello everyone. Thank you for coming. I'm going to open up with a joke. So, two little boys, Jack and Tom, were sitting in the park talking. Jack asks Tom, "What kind of work does your dad do?" "My daddy's a teacher," Tom replied. "What does your daddy do?" "He's a stockbroker," Jack said. "Honest?" asked Tom. "No, just the regular kind," Jack replied with a shrug. So, kind of giving a uh, window into kind of some corrupt things that can happen as a stockbroker. And if you watch Wolf of Wall Street, you'll see some of that in there. But so I'm going to start off by uh, giving you some common terms that you guys will see and hear as you get into the investing um, and retirement when you start doing those type of things, just to give you some general knowledge of what you're listening to and what you're hearing. So to start off with is bear market, BEAR, and that is trading talk for the stock market being in a downward trend or a period of falling stock prices. If the stock market plummets, it's a bearish market. We had one of those back in 2000 and was it eight, I believe. Uh, and then on the opposite side, a bull market is when the stock market as a whole is in a prolonged period of increasing stock prices. It's just the opposite of bear market. A single stock can be bullish or bearish too, as can a sector. So if you look at Amazon, it the last handful of years, it's been a bullish stock that you would invest in, and it's slowly started to climb and got over that $1,000 per share mark. It's kind of plateaued a little bit, I think, as recently, but that's an example of that. Really, you want to be investing during a bull market and sit tight and hang on in a bearish market, because history tells us that the market goes up and then it'll go down and it'll start going back up again. So if you can buy low in a bearish market and hang on to that and take the ride, uh, you typically turns out to be more of a positive than a negative. Another term that you need to know is bourse. This is a stock market term. Um, is another name for the stock market and originates from a house in which wealthy men gathered to trade shares. However, when you hear it in today's conversations about the stock market, it usually either refers to the Paris Stock Exchange or to a non-US stock exchange. So usually international stocks is what that kind of goes with. Dividend. Dividend is kind of an important thing to know, and that is a portion of a company's earnings that is paid to shareholders or people that own that company stock on a quarterly or annual basis. Not all companies pay dividends. If you trade penny stocks, you're likely not to have any dividends. And what that is basically the profit that they earn. You get a certain percent of that. It's almost like you're a shareholder, and so you get some of that positive gain either quarterly or annually. Um, IPO, initial public offering. An IPO is the first sale or offering of a stock by a company to the public. It happens when a company decides to go public rather than remain solely owned by a private or inside investor. So the SEC, Securities Exchange Commission, which oversees the Wall Street and the um, investments or the stockholders, shareholders, and all those things, has strict rules that companies must follow. Must have strict has strict rules that companies must follow before issuing an IPO. So a lot of times they have to release all their uh, uh, profit information, and the amounts of money, the revenue, and things like that. They have to and release any kind of um, they can't have any secrets when they go through the when they offer themselves um, uh, for a public offering. I think some of the ones that were pretty recent. I mean, Facebook. You guys heard about that. Another one would be Slack, Slacker, or Slack. That's another new one. Typically, and the experts will come out and say they believe they should open up at this price, and they'll end up coming in either lower, higher, right on. It just depends on what the value the company feels that they're they're worth. Market volatility. This is an important one. And volatility means the price movements of a stock or the stock market as a whole. Highly volatile stocks are those with extreme daily up and down movements and a wide intraday trading ranges. This is often common with stocks that are thinly traded or have low trading volumes. So it's if they don't get traded a lot and they're not being purchased a lot, they can sink or they can rise if they are being purchased a lot. A lot of times it's the buying and selling what moves the stock up and down. And if it's bought and sold quite often, it makes it a high volatile stock. So with those knowing those type of things, it's and those are entry level. Those are entry words and terms. Now there's a lot of other things that go into it, like market yield and maturity rate and uh, bonds. So you have stocks and bonds, and usually a bond is you invest a certain amount into a bond, but you're guaranteed to get if it's $100 bond, you're guaranteed to get the $100 with a little bit of interest at the end. So yeah, and at this point, I would put up a where the market's at today and where where it has been trending the last few days, and how we'll go about or what would be a good idea to uh, where to invest or what to do if either to stay where you're at or get rid of the stock, sell it, and buy something else. I know I personally have stock in Amazon. I have a little bit in Facebook, and those are tech stocks. So those are a little bit they're up and down quite often. I would say they're high volatile stocks because they are moving a lot and they're traded and sold quite often throughout the day. So that's kind of the a very what's the word I'm trying to think of? Intro to my disciplinary speech. I know I'll get a little bit better at the ums and kind of going, not looking down at my cheat sheet here at all. And then uh, I'll end with a joke to kind of bring the humor back because, like I said, that those things are very boring in my mind, even though that's what I need to learn. But and I'm still learning, so that's part of it. But here's what I'm going to end with. What's the difference between a pigeon and a stockbroker? The pigeon can still make a deposit on a BMW. And here's one more that I'll finish with too. A stockbroker was in the hospital. When the nurse took his temperature, he asked, "How much is it?" 102, sir, she replied. And the stockbroker goes, "Sell it when it gets to 103." Little bit of humor is what I'm going to finish with. But for now, that's a rough draft and a rough go. So any feedback is great. Thank you. Appreciate it.